All right, so are we in change of an regime for the markets, which is from low volatility and high return to high volatility and low return? Is it time now to perhaps time the market, trade in the market? There's a template when buy and sell hold work. There's a template when you have to buy dividend yield stocks. There's a time when you have to buy growth stocks. But there's also time in the market where you have to brace your portfolio for volatility. Volatility means low returns, shallow returns, and then more perhaps swift decision when it comes to even managing mutual funds. Let's take that conversation forward with Sandeep Tandon. And Quant Mutual Fund in a sense has really demonstrated the ability to perhaps take very out of box bet in the market, and the ability to time the market based on behavior and valuation has been quite quite exemplary. So Sandeep, thank you for joining us. Yeah. It's not turning out to be a great year so far. Will it be a great year by the time it ends?
So, if you ask me purely from a numbers perspective, can CY25 can be higher than CY24, December 2024? Maybe answer could be yes, globally. Okay. But what is very important for us to understand, this year is not about market or market return. This year what you have to watch is only about currency and global yields. Okay. And if you really look at today, we have been very early to talk about perceived risk on the dollar index. The dollar index has potential to rally. And right from September, if you're seeing globally, it's not just about India. In fact, a bit late, September onwards, currency has started depreciating. Okay? And DXY is now closer to 109. The worry is that if DXY goes back to 121, and that is the one big risk I want to highlight, it's a high probability that it can play out. Okay? And if it play out, that can be a longer term top also. But for them, we should not worry about a longer term top, but from a very medium term perspective, that is the big worry. But if you really look at from a very short term perspective, rupee has depreciated sharply, and so is the case. The global currency is not only in isolation we are talking about. So we have to look at the collective. Look at the China yield. Okay, 30 years China yield is lower than the Japan 30 years yield. Okay, it indicates something has changed, where US 10-year yields is on the higher side. It may be heading towards 6. Okay, so we have to look at the more of a global macro perspective, from a medium term perspective, rather than just looking at the equity market. I think the currency market and yields market will drive the equity market rather than the other way.
One very easy way to understand why markets are falling or why rupees falling is dollar is going up. Yeah. But is that the only reason why markets are falling, or there are local factors also like earnings, valuations, which also are at play when it comes to India?
See, I think it's always a combination. Okay. Now, if you really look at dollar if you look at the USD INR pair has been very stable for last 2 years. Okay. What people can talk about, it was deliberately meant so, but it was stable. Okay. Let's look at the other factors. Okay. Now, we have seen extraordinary hype in the IPO market. Okay. We have seen extraordinary, I will say, maniac in the, this what you call it, SME space, private side, which we don't talk about. Very large investment has moved to the private side also, which is largely illiquid in nature. And so is the case with the SME, and so is the case with the nano can, small cap. There's hardly any liquidity. When tide is in your favor, everybody was participating because M2M gain was on continuous basis, and that what is the wealth effect, and you can participate. Now that cycle has reversed. We have been very vocal about it, that something is changing right from July. It's a macro data points are deteriorating. Despite that, domestic flow was very meaningful, and that continues to be reasonably good. But what is very important to understand, these hype which get created, and it create pressure. Now we have ignoring all negative news in the past, and now it is other ways happening. Okay, so I think the way I look at this year market will be, I have been talking about that large cap and mega large cap thesis will outperform mid and small. Okay?
So it could be a market what we saw between 2017 to 20, or let's say from 16 to 19, when the market became very polarized.
Yeah.
Only select few large cap stocks started moving higher. And there was a time when these 4-digit stocks and 5-digit stocks did very well. So are we going back to that time?
Something similar, but if you really look at, like, let's say large cap has been underperforming by 20-30%, small and mid. I think something similar can happen this year, where small and mid can underperform. I'm using not word in absolute terms, but I'm talking about underperformance, where mega large and large can outperform small and mid by 30%. Okay. Now challenge comes into what happened to the absolute numbers. relative picture is quite clear. So we have been designing our portfolio for last many months pro large cap, pro mega cap, and in between we suffered also because small and mid was not unstoppable rallying was continued. So obviously you lead to underperformance, but that is a strategic call which we have taken relatively early. Now the key question comes is that whether what happened to the absolute returns. Let's talk about for 2 minutes. So I will dissect this into 3 parts. A decadal view, or long-term view, or medium-term and short-term view. So obviously, given
Let's start with short-term first.
Okay, so short-term perspective, if I talk about very short-term perspective, okay, we have seen as of yesterday, extraordinary short has been built. Now we have to look at, understand whether these shorts are strategic short or trading short. If they're trading shorts, then pullback can be very sharp. But if it is strategic shorts, then that pullback can be short-lived, okay, and people have built up short positions against their stocks. Then it has its own impact, but it's too premature to take that call. Since you are talking about extreme short term, we are seeing extraordinary short build-up happening. And if I have to look at even the rupee appreciation, depreciation has been slightly vertical. All these data points put together, if I look at, then I expect a pullback rally. Okay,
so let's
pre-budget pullback rally or maybe post-budget pullback rallies on the cards.
Okay, so let's stop here. I have a follow-up question on the short term. When we say short term, you're talking about less than 3 months.
It could be a month also.
So next 1 month, your data is indicating that a pullback rally, both in the currency market and in the equity market, is now due.
Yes.
5%?
That's the way data points is endorsing. Probability, I'm using the word, probability is in your favor that it can give you a big up move from the current level. But if I have to look at the longer term trends, okay.
No, I have one more question on short term. What would be where the markets will come back after this sell-off? Because right now it's like a receding tide phenomenon, everything has got smashed.
Yeah.
The higher you've gone, the greater has been the fall. So will the same leadership stocks, which is PSU, power, consumer tech, will they come back, or it could be new leaders like FMCG, financials, consumers?
So I will say, I think either stocks which have, particularly in the large and mega large cap, which has been beaten down and neglected for a while, okay, those cycles can come back. If you recollect right from 2000 to 2020, when talked about the hated zone stock or the most admired territory stock will peak out, and the hated zone in 2020 will come back. Now something similar is happening where erstwhile admired category stock has reached the hated zone and they are coming back.
Give me an example.
Okay, let's say Bajaj Twins. Okay, the classic example. They were DVs. I'm just again namesake. I'm just trying to. Once upon a time, there was a very admired, and then they got into a hated zone. Those are the names. Reliance. Those are the names which is coming. But this is again names for the understanding point of view, not from any recommendation point of view.
So I'm just going to break it for our viewers so that I can elaborate your point here. It's not a stock recommendation. We are discussing a case to take that point forward.
Yeah.
Bajaj Finance between 2010 and 2022 was like the real darling. Between 2022 and 2024, Bajaj Finance has given no return. But Sandeep and his team feels that stocks which were the erstwhile darlings of the market, be it include Bajaj Finance, DVs, maybe Reliance, some Aditya Birla Group names, those are the ones which can make a comeback in this leg of rally. So what happens to the real darlings of this market currently? PSUs, energy, power, solar, capex, is the game over?
No. So I'll answer that. When you talk about energy or decadal view, very constructive. Okay, you have already seen a sharp correction with any names. If they talk about utility companies or power companies, we have seen 20-25% correction in these names also. And these are large cap names. Okay, so it's not like small cap names have corrected. So I think that theme remains intact. In fact, I'm constructive on the utility space, very constructive on power space till 2030-32. That's an area which I will like to. Given the view, we are constructive on based on the rupee depreciation, as well as we have constructive view on the oil prices. We think crude has potential to move up even further. If I'm talking about from a current quarter perspective, let's say by March, if I'm looking, I expect crude to rally further. Then obviously by default, some of the energy names like Oil India, ONGC, as an example's sake, these are should be beneficiary of this cycle. The other way of looking at it is that the erstwhile, as I said, the admired territory names is coming back. So market is now moving towards slightly defensive, low beta names sort of thing. So I think FMCG has potential to come back. Staples have to come back. Given the government stress on this space, we expect some amount of, if I not say freebies in that sense, but some amount of soft corner is there that money will shift from larger infra projects to some of these schemes. So that's the one area of concern, and plus crop has been very good. Rural economy is coming back after 4 years, so we are constructive on FMCG space. We are equally constructive on some of the like NBFC which we talked about, and people have like reached that these names are like hated territory. Yeah. So some of the names where you believe quality is there. Pharma is another area which we see not only rupee depreciation, but actually the earning potential is there. You can expect YOY, even quarter-on-quarter growth in some of the pharma names, all generic companies, export-centric company, even domestic company which is doing extremely well. That's another theme which we like. Telecom will continue as a theme. So it's not like I'm worried about all those names, particularly SME space, IPO, where junk has also moved up, okay? Because there's a shortfall, okay, or everybody, I call it a very pragmatic way of generating alpha because there is no liquidity. You know, lock-in periods are there. Float is very 7-8% on the listing days. So you can just manipulate those. Then everybody has tried to participate, whether you talk about the FIIs, whether you talk about institution, we talk about Ultra HN, everybody has played that game. I think that is the...
So you will not participate in IPOs now?
We have very selectively participated. We have also participated, we have not participated in every names. Okay. Very selectively, okay? And this is an area where we have concern.
So the Ringa roses in the IPO market is getting over?
Largely.
That's one change which you see between 2024 and 25 is the IPO party is getting over.
Yeah, and I'm not saying that I'm negative on the IPO. It's good for the breadth of the depth of the capital market will increase, more IPO comes, but it has to come at the fair prices. People look at the issues getting listed at 100% premium, 50% premium, how 100% premium listing happens, okay? Obviously, it sucks a lot of people in the system who are sitting on the sideline. Their FD gets 6-8% returns, and you talking about 100% returns. So obviously, it's a natural phenomenon. People have been sucked in this rally, and that is my worry. Okay, that cycle is speaking out, and all those names which were in the so-called admired territory, in the current rally, those are the names which I have huge vulnerability in the current background.
Before I increase the time horizon from short term to medium term, I'll talk about two short term events. One is budget, and then is the inauguration of US President-elect Donald Trump. Yeah. What is more critical? What is expected from both these events, and what could go right or wrong, given that these events are crucial, one for local mood, second for global mood?
Okay. So when we talk about US oath ceremony, if I have to talk about, yes, I think it's a far bigger event. Event is very small, unlike budget will be a one-day event. This also maybe few minutes event. But what is very important for us as a macro house to watch next 2 or 3 months, from maybe let's say from January 20th to March 20th, at least 2 months, I would like to see what I call it the perceived polity risk or the policy risk, which could be there, because he has made a lot of noise. Okay, those narratives, we have to see whether it gets played out or not. So I would like to wait and watch next 2 months view how exactly will shape up. My personal sense is that Mr. Trump is first as a businessman, and second he's a politician. So he will make a lot of noise, okay, which is his style way of doing things.
Negotiating.
Yeah, he's a negotiating techniques. And I think if you ask me my personal gut feeling, no data can be backed with that. My sense is that by April, May particularly April, May type, you think a lot of things will settle down globally on the geopolitical front also, as well on the trade perspective also. Some agreement will reach with China also. And that's the reason I'm saying that second half of 2023 will be far better than the first half of 23, and maybe the first quarter might be the worst of 2025 on the calendar year basis, because of political uncertainty. And budget is, I think budget, if you ask me this time, so like hope is also not much hope is there, okay? But I think budget has lost its relevance, okay? It's just one-day event unless something really negative comes out, which I have my own doubt given the background. I don't think government will do anything. Maybe it could be constructive, the infrastructure spending, which has been lower than the planned numbers, or the defense number, what we're talking about, even on the railway front. I think maybe some clarity can emerge on that area or side also.
Okay, now let's start talking about sectors. IT is done well because rupee has gone down. Yeah. But IT companies are struggling with growth. TCS, they're struggling to grow in double digit. HCL Tech numbers last evening, they do not inspire too much of confidence. Do you think it's a matter of time IT will also start sinking back into the reality that the hope long dollar trade will start waning down and IT stocks will start correcting?
So, see, Nikunj, ultimately it's about numbers, okay? And one is numbers aspect, so we are seeing challenges on the growth front. Second thing, my biggest worry on the Indian tech from a very near-term or medium-term perspective is the de-rating of the sector, okay? Because the type of work which is happening in the US on the innovation side, I think this sort of work which we used to do as a service industry, I think it's degrowing, okay? As compared to global names also, we have started growing. And by the time on the AI front or the ML front, by the time we pick it will take some time for India. So my short-term view is actually quite negative on the tech in terms of PE deterioration. Less on earning deterioration, but I think PE deterioration has potential to get accelerated. And with the background, I have been very vocal for last 1 month. I'm talking about the vulnerability in US. If you ask me where extraordinary money has been flowing, it's US, okay? Not from a longer term perspective. If I have to, let's say, 1 quarter perspective, I have to talk about, my worry is US less in India, because US, if I have to say quant complacency indicators have peaked out. The euphoria index is actually on a higher side, one of the highest levels we have seen in whatever data we have in last 40, 50 years, one of the higher levels. And that is my worry, saying that vulnerability on US is high, and within US, which index or which sector has the highest vulnerability is the tech.
So avoid tech. Avoid tech, yeah. That is the theme. Which
more from a global perspective.
Okay. Let's talk about the other aspect, which is financials. From 2-3 years, everyone is making a case that buy private banks. And they're just not moving up. You could blame it on FII selling, you could blame it on over-ownership. Bottom line here is that with the exception of, let's say, ICICI Bank, other private banks have been hugging on to the flat line. If rates come down this year, which they would, can financials go up?
So, if you ask me my candid opinion, not very biased opinion, because we don't have any banks in our portfolio.
You don't have any banks?
Hardly any banks.
You don't have ITN banks in your portfolio?
No.
The heck happened?
Okay. Other names are there. Okay. They're big list. Okay. I have been Quant as a house for last 1.5 years. We have been talking about that leverage economy as a concept is going to decline, okay? And banks are the biggest, the byproduct of leverage economy as a thesis. And that's one of the reason why I see from a longer term perspective, US is in the cycle is speaking out from. I'm not talking about 2 years, but I'm talking about few decadal perspective. If you ask me, in our book we have talked about by 2047, US will not be a dominant force, okay? The dollar will not be the reserve currency status, which is the case right now. With that background, the de-rating of the banks has already started globally. India is a bit late to realize that. And that's the reason I personally feel de-rating, okay, of this sector has already started. Maybe PSU has been beaten down, you know, to a certain level. They were all traded in the hated zone, so they have come back. But as a sector, I think I'm more bullish on the digital side of the business, okay? When CBDC come into picture, a lot of things, commercial bank relevance will change. They will not exist in this form which we are dealing with. You will start dealing with more with the central banks in some manner. I think a lot of changes are happening.
What about capital marketplace then? I mean, 3 years ago, someone said, look, I'll not buy HDFC Bank, but I would buy HDFC AMC. You've done reasonably well. Someone said that I will not buy a PSU bank, but I would buy CDSL. They've done reasonably well.
Yeah. So when we talk about, let's say, when India economy is going, I said that the depth and the breadth of the capital market is rising or increasing, which is definitely is the case. And that's the background. All exchanges, wealth management company, we are equally bullish on the wealth management space. I'm equally bullish on the AMC as well as the insurance space. I think these are insurance, okay?
But insurance is not growing. Data seems to be indicating it's a fragmented space.
But ultimately, if you economy is going to grow, hospital benefit is going to, this space will grow, okay? Don't expect the linear growth sort of thing which we have seen in the past, but broadly constructive. Okay, let's say today on the AMC perspective, this quarter may be bad for everybody because the AUM has collapsed because of the market collapse. But that does not mean from a longer term perspective, I think these are sunrise industry. I call this could be emerging FMCG space.
But the stock you own is not the sunrise company. LIC is not the sunrise name of the sector which you're calling it sunrise. It is getting into sunset.
Okay. Maybe from a price point of view, but I look at the combination, okay? Sector is in our favor, under ownership is in our favor, valuation is our favor, okay? And they were the biggest beneficiary of the rally which we happened. Whatever reason it has not played out, that's a different issue. But when we choose or prepare a portfolio, construct our basket of stock, we look at multidimensional approach. And when multidimensional approach endorses certain things, we will play it.
Okay.